All right, good morning, everyone who's joining. We're going to give it just a couple of minutes for some people to roll in, and then we'll get started. A couple more seconds here. All right. Well, thank you first to our guests, our guest speakers for joining this morning, and welcome to everyone who is slowly hopping on the call, trickling in to join the discussion today. Feel free to drop any questions in the chat, and we'll try to answer them at the end if we have time. So we can go ahead and get started. Good morning and good day, everyone, once again, for joining. If you're listening in, I don't need to tell you that the financial markets move fast, with crypto taking that to the extreme. So to capitalize on opportunities, you need to be able to move quickly and efficiently. However, you also need to make sure that you're doing that while remaining incredibly secure. And on top of that, as your firm and strategy and team grow, you also need to be able to scale. So efficiency, security, scalability, the three prongs that we'll be talking about that often feel at odds with each other. So the question then arises, how do you do all three of these things at once and solve the crypto ops trilemma? That's what we'll be discussing today with our guests from Galaxy, DB Chain, and Fireblocks. We'll hear how they approach solving the crypto ops trilemma and how you can do so as well. So we can go ahead and jump right in. Thank you, everyone, once again for joining, and we can kick off with some intros. If y'all want to just share your name, company and title, and what your company specializes in.
Sure, I could jump in there. Tom Scagnelli, I'm a director of operations at Galaxy Digital. We're a leading provider in the crypto markets, wide-ranging things, trading, lending, derivatives, mining, validators, all that good stuff.
I can go next. So Michael Robkin here, Global Head of Business Development at DB Chain. Apologies to the audience for my voice today. It's a little bit raspy, coming down with something. So we are one of the leading crypto liquidity providers and market-making service providers globally. We empower institutions, exchanges, protocols, traders to access a wide range of cryptocurrencies through APIs, API interfaces, and through chat trade, etc. And many of the institutions and crypto companies around the globe really depend on our robust stable tech stack to help really scale and power their crypto businesses.
Awesome. Hi, everyone. Rohan Janeja here. I'm VP of Product Strategy and Head of Institutional Trading at Fireblocks. Fireblocks is a leading provider in the digital asset space for helping firms use our platform to issue, secure, as well as transfer digital assets. And we work with a wide range of customers. Me personally, I'm more focused around the institutional trading market and essentially building the best platform for allowing them to do that. Nice to be here.
Awesome. Thank you all for sharing your intros. And I'm sure that we're only scratching the surface here. Each of your firms spans the gamut of financial services and crypto. So that's what we will be diving into today. So let's just level set and start from the top. Again, the services span the gamut, but what does operations mean to each of your firms? And I guess a little bit more detail there, you know, what might be included and what isn't. Is that different or similar to traditional finance companies? And how important is operations to each of your respective firms?
I can take a quick stab at it, and I think then you'll probably hear from more of the experts here who've actually applied that. But here at Fireblocks, we're obviously a provider, and we have a wide range of customers from 3 to 4 people shops to sell-side shops with hundreds of customers and employees. For us, like when we think about operations, we see our platform as a means of enabling these firms to essentially set up the most robust operations possible that will, one, allow them to interact with the widest part of the ecosystem. And by that I mean accessing the wider part of the ecosystem. It could mean something as simple as token support. How long or how quickly can you fire up token support for new assets? It could mean being able to interact with CeFi counterparties, venues, or interact with DeFi protocols. It could also mean things like staking. So there's like that access part of it, and setting up the operation processes you need to be able to access the wide part of ecosystem and quickly add on to that. And then the second part that we think about in terms of operations is, of course, the security part of it. And risk and security sort of go hand in hand. And here at Fireblocks, that is really a really important point for us, is to make sure our customers are setting up operations that are secure end to end as they go about interacting with this wide ecosystem. And again, that would mean differently for someone active in the DeFi ecosystem than someone who's more working with counterparties on the centralized side or with venues. But essentially, what we want to do with Fireblocks is make sure our customers have access to the widest range of the ecosystem, and they're accessing it in the most secure way possible through their operational setup.
Cool. I can go next from a DV chain perspective. So I think we really look at operations as the backbone of our trading activities. And it's vertically integrated, with all of our trading activities, and it's fundamental to our business. I think operations encompass a wide range of functions, right? Including trade execution, settlement, risk management, compliance, and most importantly, underlying technology infrastructure and the power of our trading platform, which is really, again, our backbone. I think I mentioned that we look at operations as completely vertically integrated with our trading, and what that does is it ensures efficiency, security, and more compliance. Operations, like as I mentioned, play a highly crucial role in businesses like ours, Galaxy, Fireblocks, and especially, which Michael mentioned earlier, in a fast-paced and highly regulated space that we're in. Really, I think from a reliability and efficiency standpoint, that's really where we have to meet the standards and the industry standards set, by us, companies like Galaxy and others, and with the helps of Fireblocks behind us. So yeah, that's kind of the short and nut of it.
Yeah, I could just, kind of echo that sentiment, right? At Galaxy, we have a wide range of things we do here, and operations really sits as a central role of all that, a central function that works with not only our internal teams to support them, but also our external facing customers or our external partners. So we're seeing both sides of the company, external and internal, supporting them as efficiently and in a scalable way as we can, but also secure. And some people always like to say, we're the first line of defense in a crypto market where we're seeing the things first. So we're usually the first to raise our hands when we see something that might look off, and making sure we honestly face this dilemma on a daily basis, and there's so many different things that pop up in this market, new opportunities every day that we have to learn on the fly on and then kind of tackle immediately. How do we do this securely? How do we do it in an efficient way? And then how do we possibly scale up to take more advantage of this opportunity that we find?
Awesome. Thank you, Tom. I think that transitions excellently into our next point, but Yeah, I will make a comment on, I think, something that each of you touched on, but Michael, you wrapped it up very well by talking about the integrated nature of both trading and operations in cryptocurrency firms. So that's something that we've seen is a little unique and obviously plays a role in trying to maintain the three prongs of this trilemma. So with that, we all are familiar with the blockchain trilemma, decentralization, security, scalability, but Fireblocks has introduced to us an operations version of this that tries to capture the difficulties that can arise in crypto operations. So once again, the balance between security, efficiency, meaning moving fast and cost effectively, and scaling to introduce new service offerings as the crypto industry is constantly evolving. So on the face of it, how does that resonate with each of you and your firms? And how are each of you approaching this problem?
Yeah, I can get started if you guys want. So I think the approach here, right? So as you broke it down, Michael, and as you know, it's bled in from the last answer, security, efficiency, scalability, right? All of those are independent pillars, but all of them are tied together. Especially in our space, from a security standpoint, stakes are incredibly high. Any security breach could have catastrophic consequences to us, to our clients. So we take every precaution to safeguard operations against any potential threats, and Fireblocks is a great help with that, as well as other providers that we use, and everything that we build in house as well. I think efficiency is critical, right, for scaling, executing trades, and making sure clients depend on your ability to make sure you're there when they need you there, and deliver on the expectation that you set for them, right? And then lastly, like scalability, as you mentioned, it's the ability to grow and adapt in a very fast market. New chains, new tokens, financial products constantly emerging, right? And so operations need to be able to support that. And so, the way that we approach that is really by leveraging, cutting edge technology. We ensure our operations are secure, they're efficient, they're scalable. We either build it in house or we leverage third parties like Fireblocks to help us with that. And one other thing that we really focus on is a continuous feedback loop. We want that feedback loop between our trading, our operations team, and our users, really allowing us to quickly identify and address any issues that arise, or potential issues that might arise in the future, and how we can nip them in the bud quickly.
On something quite basic maybe here, but at some level or the other, I feel every trading firm, every OTC desk, every market maker is trying to solve for this trilemma in their own way. For a company that is using 5 different wallets, using Gnosis multi-save to manage their $5 million fund, they're also trying to solve for it in whatever way that looks best for them. They might be operationalizing for, let's say, security more than efficiency, but maybe that's their approach. And you also still have firms who are essentially breaking down their assets in cold wallets, distributing it geographically, and all of those things. So there's always a trade-off to be made here. What we truly believe here at Fireblocks is that having a robust operational process, having operational efficiency and resiliency eventually generates alpha for firms, right? And that could mean a competitive edge. That could mean being able to deploy more capital. That could mean being able to access more venues. But eventually, the more you invest in your tech stack and your operational processes, the more benefit you will gain out of it. It's not necessarily just a cost center that you're just seeing it as a means to an end. There's just and that's like the link between trading and ops. If you don't have a robust operational process in place, you will be severely limited on what you can do in the market, how much direct market access you can have, and also what you can actually do in the ecosystem. So that's like how we sort of think about this problem.
Yeah, and I think those are all great points by Michael and Rohan. And from my perspective on Galaxy side, kind of to echo what they said, we have a wide range of customers. And this trilemma, if you were to ask any of those customers to rank what's most important to them, is it security? Is it efficiency? Is it scale? They're going to be different answers every time. So, over the time, in the market that I've at least been involved in working with partners like Fireblocks and Galaxy itself, we've really tried to build up robust processes internally, working with and leveraging great partners. And that gives us the flexibility to say, if we want to build a process that's more focused on security for client base A, or more focused on speed and efficiency for client base B, we have the ability to do that.
Awesome. Thank you, Tom. And thank you all. I think, yeah, you're really driving home the point that a lot of the efficiency that comes with just the crypto industry in general also entails having to often utilize a lot of this new tech in order to just stay on top of, as we're talking about, the operations of these whole departments. So with that said, we can go ahead and try and dive a little deeper into the first prong here, which is security. I see that we already have one question in the chat here, which I can dive into briefly while we're on the topic, but high level again, how do each of you think about balancing the need for being incredibly secure when obviously we also need to be incredibly scalable and efficient? So you'll touch on that a little bit, but maybe we can touch on any aspects as they pertain to possibly personnel or access, workflows, even counterparty risk.
Yeah, I could start here. And I think, in this industry and the products we trade, I think it's important to always remember possession is key, right? It comes down to that. And when it's all digital and, there's that risk there of losing the possession of your assets for any security breach, it's always a paramount focus. However, like Rohan said before, there's trade-offs, right? If I want to be extremely secure and use cold wallets and things like that, that's going to slow me down from an efficiency standpoint. So it's really finding the right balance. And at the same time, again, over the evolution of our company, we've become, we've focused more on risk tolerance. What are we okay with accepting to trade off of, maybe we don't have the most secure, 100% secure cold wallet process. But the risk we're taking is now I can get speed for my customers that need it. And how have we done that? We've have robust KYC processes and onboarding to make sure that we are, doing business with good actors, not bad actors. And we've built a lot of internal processes, maker checker processes. We also look at the size of the transactions we're doing. So, we might have kind of a materiality tiering. So if we're going into the hundreds of millions of dollars, we're going to go slower, right? We have to make sure we're being secure and careful when we do those things. And it might tier down. So if we're doing a $50 transaction, we might be a little more laissez-faire with our controls. And again, as I mentioned before, we're leveraging good partners like Fireblocks who have good customizable controls that we can use as we see fit. We have our own internal processes, and the combination of theirs really give us flexibility to kind of say, how do we want to move the scales more secure or, faster?
Yeah, and I think, Tom, you hit a lot of the points there really well. Maybe just echo some of the things you said, where, security, just like you guys do at DV Chain, we invest heavily in state-of-the-art security technologies, whether partners or, we build it in-house. Our operations are, built to be secure from external threats as much as they could be in the world that we live in, right? So, including encryption, multi-factor authentication, and way more beyond. And, I think you guys both, Michael and Tom, touched really quickly on something that's important, that's personnel training. Security is not about just the technology, it's also about the people, right? We want to ensure that our personnel are highly trained in having the security best practices and controls are strictly enforced. And, one good thing that you mentioned there, Tom, that, a lot of people don't discuss is counterparty risk, right? Just like you guys, we conduct a DV Chain, thorough due diligence, make sure, we do as much as we can to mitigate as much risk at every stage of the trading process, whether it's, thresholds like you mentioned, or, just running a simple check to ensure that you're not dealing with a bad actor. So yeah, I think that covers my answer on that because Tom covered it well.
Yeah, from my side as well, I think these guys hit on a lot of the important points. We of course think of security as like a defense in depth approach, right? You have multiple rings of security. It's not just one piece. So one part of it is obviously your base level, which is your wallets. What wallets are you using? Are those wallets actually secure? So at least you don't have the risk of this external attack onto the underlying wallet technology, where Fireblocks uses MPC CMP, which we believe is one of the most secure versions of MPC out there. There's folks who use HSMs, other types of cold wallets, and I think that market is getting increasingly, let's say, there's a few good options out there, right? Like that's your base layer of security. Above that, and Tom spoke about this quite a bit, is having your governance layer or your policies. So having essentially the ability to design as per your business needs, as per your the different kinds of interactions you're having with the ecosystem, being able to define how those interactions go through your system, right? So if I am going and interacting with a smart contract to make a swap, I can have a specific set of rules that govern that process. Versus if I was just transferring assets to another wallet of my own organization, it could have a separate set of processes. And one could be, let's say, a little bit looser in terms of the amount of security and manual checks and approval groups that are applied to it versus the other. And that's where I think it's really important to have a highly flexible and granular template you can work with, and then really go in there and define strict rules around areas that need to be strict, and then automate parts of it that can be automated. The other part of it is, of course, personnel. And a note on that is, like, we always see in the media and all, a lot of news around attacks or hacks that happen using Lazarus and from other sort of large agencies. A lot of attacks also happen from internal sources. So this could be ex-employees or current employees having processes in place to, let's say, remove access for ex-employees, to quickly switch off access in case a current employee is staging an attack. To have processes in place to block those attacks is equally important. And that's not something that gets spoken about a lot in the space, but that's what we work with a lot of customers. We see a lot of prospects coming to Fireblocks because of reasons like this. So it's really important to make sure your system is not just robust enough to defend from outside attacks, but also like internal personnel. Then some of it can be malicious, some of it can be completely as an impact of a phishing attack, or in the space of DeFi, for example, going and signing a wrong transaction in DeFi can make you lose all your funds. Meanwhile, you don't even know what exactly you did there. And a lot of folks are relying on things like blind signing because they need to access a particular protocol, and the opportunity is there, and they go and sign something malicious from a phishing site. So for each of these areas, there are tools that are out there. Like in the space of DeFi, you have the ability now to run a transaction sort of in advance, at least, to see what you're actually going to sign and what is the impact of that going to be on your balances and so forth. You have the ability to monitor live all the major applications out there to see if there's been a drain on a particular app or a particular ad that's turned malicious. Get those notifications, and that can greatly help you improve your DeFi operation side. On the CeFi side, I won't go deep into it, but how do you manage counterparty risk, whether it's the pre-funding problem, whether it's a settlement problem? And of course, firms like Galaxy and DV Chain maybe can, in certain situations, afford to go second. But how do you do it in a situation where you're on the receiving end? And that's where things like delivery versus payment tools come into the play. So there's a lot of technology out there. It's not perfect. These tools are still getting built today, but security, of course, is a very important part of the trilemma. But like Michael and Tom both covered in great detail, you can't really sacrifice efficiency or speed. So it's very important to put in place the right tooling and the right governance there, so that you can operate at speed, but still know that you've got the right ring fencing in place.
Awesome. Thank you, Rohan, and thank you, Michael and Tom. I think y'all covered it perfectly. Yeah. Obviously, security is the foundation for a lot of what we're doing, so not really anything that can be sacrificed there. But as you all said, security is often targeted at its weakest link. So whether that's traditional OPSEC or just personnel training, the entire stack of security needs to be flexible, but documented and adaptable. So maybe quickly touching on the question while it's relevant here that we have in chat, we had asked, what does security entail? We touched on that, but do each of your companies have business continuity or resilience plans?
Yeah, I could just jump in quickly there. I mean, we're briefly talking about this stuff. We could spend a whole day on security, right? I mean, there are so many different, and we're speaking about it very broadly, right? For me in Galaxy, there's so many different ways of it. There's security internally, there's continuing training for employees, there's a whole security team that does monitoring on their own independently. We have internal audit teams to check us. We have finance doing checks against ops and vice versa. So it's not only about, what we say is secure in cold wallet, but also, the classic stuff, just training and personnel training against phishing attacks, all that stuff. You have to cover it all. It's not just thinking about, what's the security of my wallets.
Great. And on the business continuity side, quickly, I didn't touch on this earlier in the conversation, but Fireblocks is essentially a direct custody firm. So we're not actually taking custody of our customers' assets. We are enabling them to custody their own assets using our technology. So, of course, they're accessing their wallets through the Fireblocks platform, through our APIs, and there is always, however thin chance of that system being affected in terms of its uptime or its continuity. So in those scenarios, our customers, by using either one of our authorized third-party disaster recovery service providers, which is quite covered in Station 70, or themselves, these people have the ability to essentially have disaster recovery kits, which they can operationalize and activate in the case of an extended, let's say, 5 block downtime, and move their assets to another wallet or exchange or anywhere else that they'd want to do. So they always have, and by the way, they can even do this without Fireblocks having gone anywhere, right? At any given point of time, if they just want to take their assets and go elsewhere, they have the ability to do that. But yes, business continuity is, of course, a really important component, and we know, like, us being down should not necessarily keep all of our customers away from their funds for extended periods of time.
Awesome. Thank you, Tom and Rohan. Yeah, completely agree there that, a lot of this falls on the user ultimately to make sure that their processes are secure. So with that foundation in place, security, we all know that new opportunities are always presenting themselves in this market, from new tokens, new chains, new ways to earn return for investors and clients. So on the topic of scalability and trying to advance into these new areas that are always popping up, how do each of your firms think about this from an operations perspective?
Yeah, I could jump in first here. We briefly touched on it, but you have to be flexible, right? We've built out so many different processes, worked with so many different partners, and it's curveballs every day. It's never going to be something very specific. And I came from TradFi in the past. That was a very predictable day. These products, in TradFi have been around for decades, whereas this stuff has only been around for at most a decade. So it's constantly a kind of whiteboard session when new opportunities arise. Everybody around the firm and all the places that need to be there just kind of get in a room and really just, we have smart people in there and we talk through it. Like, what can we do? How can we offer this? How do we do it efficiently? And ops is in the conversation, I'd say way more heavily than I would say in the TradFi sense from my previous experience. Um, we have to find the right balance of this trilemma. And at the same time, we've talked about security and loss because of, malicious things, but there are other reasons for loss as well, right? When we're doing these new opportunities, again, I said possession. If you fat finger an address or make a mistake in your process because you're moving too fast, that's an immediate loss. It could be an immediate loss, right? So that always has to be considered. There's always that balance, and you can't just sprint before you can walk.
For sure. Nah, those are some great answers there, Tom. So I think from our perspective, scalability from an operations perspective kind of breaks down into a couple of factors, right? So what is the strategic priority, right? And then you kind of bring operations into that. So scalability, is a strategic priority for companies like us. Operations play a critical role, right? And it helps us grow and take advantage of these new opportunities, support these new products, support these new chains, support these new tokens. Um, I really think there's a couple things, when looking at scalability from, perspectives of trading firms like ours. It's is there early involvement? Do we want to have early involvement? What does the infrastructure look like, right? With regards to whatever we're, putting on the board with, what we're adding. What is the long-term view? What is this? How scalable is that? And I think the one thing that, many people kind of forget is, they put out a product out there and then they focus on operations and scalability after. Whereas that should be done strategically, where operations should be built out. The ability to be agile and the ability to be easily integrated should be built out, and then scale, and then rolled out and then scaled out properly. So from a perspective of how we do it, I'd say high level. That's probably what we focused on.
Yeah, I think Michael and Tom covered this beautifully. So 100% agreed on the flexibility point that Tom said is like so important. You absolutely have no idea what's going to happen in the next month, the next 3 months, or next 6 months, right? Which token is suddenly going to become super hot, which DeFi protocol you'll absolutely need to partake in, which venue you need to absolutely create an account and be on. You don't know that. And if you have, like Michael said, built processes that are cumbersome, to add support for new venues, new protocols, new tokens to, it's going to have a cost on your business. There's no two ways around it. So making sure you have the right building blocks in order to be future proof for opportunities that you can't predict is hard. So you just essentially make sure you have like as much of a modular infrastructure as you can have, infrastructure that allows you to do things as freely as possible. If you need to rely on a third-party provider every single time to add support for something before you can access it, you're more likely than not always going to be in a queue and behind competition, right? So how do you counter for that? Go for tooling that is more flexible, that allows you to do more than what comes in like an out-of-the-box sort of manner. So that's one very important part of it. The other, maybe on the scalability side, is choosing your solutions, knowing their capacity. So a lot of times we talk about this Fireblocks, but you're always building for peak capacities. You're not building for your average day. It's always when stuff really gets crazy that things start to fall apart on the seams, and you need to make sure you're ready for those days, because if you're not, again, huge loss for the firm from a business perspective. And that's where, think about the tooling you're putting in place. Is that going to be able to, still stand when you're processing 10 times the number of orders that you were processing on your average day, when, the gas fee spikes to like 20x or whatever it is. So really being comfortable with the support you get, the SLAs that your tooling provides is going to be very, very important in times like those. So yes, absolutely agree with Michael and Tom there, and just that's the key component, is being flexible and making sure you put the right tooling in place for sort of peak capacities.
Awesome. Yeah, very well said. As we all know, crypto doesn't have circuit breakers, so it's usually during the more exciting, volatile times that we get to stress test our processes. So yeah, with that, and with a robust, secure foundation, and it sounds like flexible, but also robust policies in place to scale operations. How do we also finally think about efficiency, which each of you have touched on a bit already, but being able to move fast and cost effectively? You touched on gas fees. Maybe that means saving transactions for certain times of day. But yeah, how do we balance moving quickly with security and scalability?
I'd say take the humans out as much as possible. I mean, that's large firms invest a hell lot of capital in automating their flows and making sure like things move as fast as possible. And firms that are actively trading, seconds, minutes really matter. So if you can, with a good amount of confidence, automate certain flows that are maybe to known destinations, They're known in terms of they're expected. So every day at a certain time, something happens. You can automate that. Things that are below a certain threshold that can be automated. If you can automate a large part of your daily operational flow, it frees up a lot of capacity, and that capacity can be really used for decision making, which is something that you might still need that manual oversight for, that sort of 2 out of 3, 2 out of 4 check for, but being able to really take a large part of your flow and being able to use automated, let's say even signers, not just approvals, but also signers, can help alleviate a lot of that time that is lost in getting or finding the right people and when you need to move assets. So that is one thing I definitely highlight from my side.
Yeah, and I could add a little kind of point of view from my previous TradFi days, going from a T+2 market when I was there to instant settlement. I did not realize what a luxury having that extra 2 days is, right? So when you talk about efficiency and speed and stuff in an instant settle market, it's very difficult. You don't have that. If you move too fast and you make a mistake, it's already too late. There's no recovery period. And in the TradFi world, we used to do a lot of reconciliations and checks after the fact because we had that. And you're working with the Bonies and the Goldmans of the world. Obviously, like I mentioned earlier, with KYC process and having good customers is important because it's not as finite as I might make it sound, but if you send it to the wrong address, it is finite. So what we've worked on is really just setting up all these pre-settlement checks. Really, how do we get those things done before the fact so that we're comfortable when we settle and we can move fast? And like Rohan said, the more repeatable we can make these processes, the more we can schedule things. That's where we could really automate. So I know, at noon every day, I need to check my inventory and gather it up to get ready for settlements at 1. And then I'm going to do all these pre-settlement checks. And as long as those are good, we're going to send stuff out the door. But it's when, at the same time, you need to be flexible, as we've always said, right? Because there's going to be curveballs. There's going to be days where the market's reacting differently and we need to move stuff here and there, or some providers are having issues. So we want to make sure we get our coin, in where we need it so we can support our customers and not be kind of subject to other market conditions. So it's, again, I think it's really it's a balance between all the three, and you really have to look at each case to figure out where to focus most of that balance.
Yeah, I think really most of the points have been touched, right? And to what you mentioned there, Tom and Rohan, with efficiency, you have to pair agility, right? So like you have to be prepared to continuously iterate on your processes, even if they are automated. And it really is a fine balance between the three, because you never want to compromise on security. But you also recognize that, in our business, there's a need for efficiency and a need for scalability. So, as Tom, you just mentioned, finding the right balance between the three is really, what we've tried to focus on in the past. I know, most firms in what we're doing have focused on that.
It can actually just another thought on that. It can actually help you enhance some of the other components, right? So, one of the things we spoke about in security is things like counterparty risk. A lot of players today, like their risk teams, will set limits for them. You can only have X dollars of assets on Y venue, and what you could do is something as simple as automate every time you reach that balance and sweep a certain amount of assets off that venue into a secure vault, right? Like that is something you can automate. It is going to be super efficient because it doesn't require any human touch anymore. It eliminates the need for someone to ping someone and then to initiate a process. So end of day sweeping from running end of day settlements based on let's say a CSV file or your own system's backend, feeding into your provider to initiate all of those transactions simultaneously, and the ones that are below a certain limit or to a trusted counterparty going through in an automatic manner. So you have additional security, but now you're running a much more or a much smoother operation. I think it all goes like sort of hand in hand, and in some cases there's a trade-off. In other cases, you can actually invest in one and gain also like a plus on one of the other elements of this.
Nice. Thank you, Rohan. That's a great point. surprisingly, we're already 40 minutes in. So I think we're making good time here, but appreciated the conversation, everyone. I know that the audience has also. I know we've kept it pretty high level, but I think we've touched on each of these prongs kind of in depth, from robust personnel, security training, remaining flexible, automating processes where we can. So trying to bring it together here. As you all know, we see a lot of firms planning or sharing their interest in entering the industry. We see growth from existing players and a lot of people possibly just listening to this call, wondering how that they can get a foot in the door and get started in the crypto space. So general advice, what advice would you give from an operations perspective to firms in the digital asset space or looking to get in?
I think from my side, Michael said it earlier, like don't think of it as an after the fact situation. Plan in advance, plan for growth, and invest early in making sure you have the operational setup in place that can support your business as it grows, both in terms of volume and number of transactions, but also grows in terms of what you do in the digital asset space. We see a lot of firms entering only maybe trading with one or two counterparties or on one or two venues, and in a few months they want to access more assets. Now they want to get into DeFi. Now they want to get into staking. Replatforming is painful. It is expensive. So think ahead. None of us know the future, but the broadest view you can have today, starting off, and being able to put in place operational processes and tools that will support that is potentially going to save you money and headaches later down.
Yep. Well said, Rohan. And I think we touched on a lot of these points, and you just did as well, Rohan. So I'd say, prioritize operations early. And firms entering the space, like make sure you know what you're building and the demand for the product that you're building. Operations are not just a support function; they're a critical part of a driver of our business. Invest in robust operations framework, whether build it in house or third party. For somebody like Fireblocks, make sure you do your research and know what you need. And then I think lastly is integration is key. So whatever part of operations you're doing, you want it to be easily and fluidly being able to integrate with other parts of the business. And so, yeah, I would say those are the three key factors from my end.
Yeah, and I think these guys said it great. Operations is definitely a central function. It needs to be planned ahead. If you're not planning ahead, you're going to be chasing, and that's not a position you want to be in. Especially in this industry, like we've talked about, new opportunities every day. Things that not only your company are going to be learning, but the industry is also learning, right? So you got to be flexible, you got to be adaptable, and the only way to get into that position is to kind of really plan ahead and have the time and capacity to do so. If you're not planning ahead and you're just playing chasing, and you're just adding more cost into a cost center that you really don't want to constantly be in that position.
Awesome. Thank you all. Very well said. I completely agree. As we started the conversation saying the crypto industry moves fast. So as I don't need to tell you all, lots of planning needs to go into that to make sure that nothing goes awry. So let's see, we have one additional question in the chat. If we have a little bit of time, do you guys recommend testing in advance of peak days in practice? Is that something that's done?
Yeah, I mean, absolutely. I think it's a tried and true kind of process, something that TradFi would do very well. Obviously, with the new technology and new partners we deal with, sometimes maybe those things aren't available and you got to find creative ways to test these things. But you never want to be in a position of reaction. That's where you're going to get hurt if you're always reacting. You got to be proactive, and that requires building out new processes and testing those prior to a very high stress level. And as we know, volatile market equal very stressful times. So you got to be prepared.
Awesome. Thank you, Tom. Well said. Wow, this was, I think, pretty well timed. I think we're getting right up to the top of the minute here for what our planned schedule was. Don't see any other questions in the chat, but I'll just throw out one last question from myself. So anything we didn't cover here? You all have a wealth of knowledge, but is there a quadrilemma that we're not thinking of? Something outside of security, scalability, efficiency? Any last thoughts?
I think we covered a lot. My brain can't handle a quadrilemma, so I'm gonna pause there for me.
Yeah,
Yeah,
I'm gonna echo Tom's thoughts on that one.
Yeah. Yeah, I think we covered a lot, and there's, as we know, plenty more that we can dive into each of these categories. This conversation could have been a day long, or a whole series of conversations, but really appreciate each of your time. I know that the audience did too. We learned a lot, and yeah, hopefully we get to speak again at some point.
Great. Thanks, guys.
So,
thank you guys. Thanks for having us, Michael.
Take care, guys.
Bye, everyone.